What has been your view on the lackluster performance, if you will, so far in 2021?
So, compared to what do we say that? Because where you see where we've come from, back at the beginning of 2019 and then this real run up in 2020, I think I've lived through a number of these bull markets, and the last one was in 2008 to 2015 with the spike in 2011. And that was on the back of the great financial crisis, driven by an unprecedented global situation. This pandemic certainly has surpassed that as a defined sort of unprecedented global situation. It's not over yet, and if you go back to 2008, the great financial crisis, that initial run-up with the gold price, the massive quantitative easing, devaluation of the currencies, and it's worth noting that that quantitative easing was surpassed in just 9 months and some in this last year following the COVID pandemic. And now everyone's wishing it over, and I think the difference is we saw a lot of the money pumped into the global economy getting captured in the banking system, whereas over the last 9 months, a lot of that money has actually arrived in Joe Public's hands. So you've really increased the amount of money supply in the developed world. And that has been spent and is going to still be spent. And so you've created pockets of economies, and as you pointed out in your introduction, many unprecedented, what I call bubbles in the making. And it's going to take some time for everything to find its sort of equilibrium. And gold, running gold mines at $17, $80 an ounce is a lot better than running gold mines at $1,200.
Well, and obviously we're seeing that reflected in your quarterly results. To build on that, though, the sort of the macro reality, I had mentioned the well-known investor Jeff Gundlach basically saying on Twitter, quote, Bitcoin may be the stimulus asset, doesn't look like gold is, even though he is long-term bullish on gold. I mean, you must be getting questions from people asking for your opinion on the cryptocurrency craze. You use that word bubble. I'm not sure if you were talking about Bitcoin, but what is your opinion on this appetite for digital currencies?
I think there's this real concern by everyone on how you store your wealth, how you keep value in an environment where everyone is, the printing presses are hammering away at a rate that we've never seen before, and there's no evidence of any sort of discipline, fiscal or otherwise. There's paranoia, fear, and a desperation to try and do something to help. And so, right now, I was just sharing the point earlier with somebody else. It's hard there's no long-term visibility, there's no medium-term visibility. There's a lot of money going into the developed world, and there's some real pain coming down the pipe in the global economy. And one thing that's clear is that the world has not managed this pandemic well. And so, investors are confused and anxious, and there's this response trying to offset what is clearly a risk in devaluation, massive devaluation in the traditional ways of investing and retaining your wealth. And one of them is, currencies are not being only depreciating, but, you can't really get much out of it when you put that money into the bank. So, I mean, right now gold is, many times in my career have people suggested that gold doesn't have real value. It's never worked out that way. It's one of the most consistent performers out of all the asset classes. And I've always said, have you ever seen anyone put their hand in their pocket and pull out a bunch of Bitcoins and hand it over the counter? It doesn't happen.
Yeah, no, I haven't had that experience yet, Mark. We'll see what happens. Now, speaking of staying productive and part of your strategy has been to focus on what you see as the core properties. In your announcement today, you are setting aside a lot of money, upwards of $750 million, to basically put into the pockets of shareholders as you shift away from some non-core assets. How did you reach that conclusion? I think a lot of people, especially when they're talking about Barrick, they'll quickly compare you to other players in the sector. Maybe they're making dividend moves, et cetera. Why do you think this is a sort of the shareholder-friendly move to make?
So, it's not about being friendly to shareholders. It's about making returns to our owners. I would, again, bring an analogy with the great financial crisis when I was running Rand Gold Resources. 2009, 2010 was the first time ever we drew down on our revolver. We had debt, and then the gold price ran up in 2011. We used that. We kept the discipline. We paid down the debt. We did start growing our dividends. In fact, we grew dividends for 13 years in a row, that produced a company that's even today considered one of the most profitable gold companies this industry's seen. And when we merged with Rand Gold, that's Barrick merged with Rand Gold 2 years ago on the 1st of January 2019, one of our objectives is to bring back that business focus, that profitability, as you point out, focus on tier one assets, high quality assets, clean up the non-core assets, which we've done. With the last one was just a couple of days ago. We sold Lagunas Norte in Peru, and really focus on cash flow, returning cash, and building a strong balance sheet. And today, Barrick has no net debt. If you go back to 2013, it had like $12 billion of debt. And when I took over, quite a few $1 billion of net debt. And so we've cleaned up the debt. So we have no net cash on the balance sheet. We are growing cash. We did realize $1.5 billion of non-core assets. And we felt again, this market is so confusing, hard to see the end of the runway at this stage as far as the global economy is concerned. So, but at the same time, it's an unprecedented long-term spike in the gold price already. And so it makes good sense that some of those assets that we sold, that's not cash from our business. That's cash from non-core assets. It's a very efficient way to return capital to shareholders. It really gives a return profile of about 3.6% yield on the Barrick stock. If you take that $750 million added to our 9 cents a quarter dividend, which is our long-term commitment to pay that dividend to our shareholders, assuming a long-term gold price of $1,200, and that takes us to the end of this year, and gives back a sizable chunk of cash to our shareholders. It still keeps Barrick as the strongest balance sheet in the gold industry. It positions us well to exploit continued consolidation of the industry, which I really believe still needs to happen. We led that initial phase of consolidation, which was closely followed by Newmont and Goldcorp, and then a string of other transactions. And I don't think that job is done yet. At the same time, and if the gold price stays up where it is, we'll continue to grow cash on our balance sheet as well. And I think this is the time. It doesn't make sense to be reckless with one's balance sheet at the top of the market. And we recognize that we are at or near the top of the market.